Hi, I'm Jimmy. In this video, we're going to look at 5 growth stocks that could be great stocks to buy and hold for long-term investors. We're looking at growth of revenue or profit or free cash flow. Plus, I'm using discounted free cash flow to make sure that we don't overpay for the growth that we're trying to acquire. Okay, now I just want to let everybody know that we're actually starting to build a website that will allow us to research stocks and quickly value those stocks using methods like discounted free cash flow, price to earnings, price to book, and a few other different valuation methods. We're hoping to have the website up and running in the next 6 months or so. So if you decide to sign up today, well, we're locking in that price. So if you sign up today, that price will never, ever go up on you. Whatever you sign up for today is where you get locked in. I will leave a link in the description below for how to sign up for that if you're curious. Okay, now let's jump into this thing. First up, we've got an easy one, and this is a stock that I personally own, and that is Alibaba, ticker symbol BABA. So it looks like Alibaba could be priced nicely right now, using a required rate of return of 7.5%, which is typically what I've been using lately. Well, the stock looks super undervalued. But even if we used a 10 or a 12.5% required return, well, Alibaba still looks undervalued. Now, when we switch over to some charts that could indicate how the company is growing, by the way, this is one of the features that I want to add to the website, but either way, we can see that growth looks to be very good for Alibaba, especially when we consider revenue and free cash flow growth. So Alibaba is one of my favorite ones, hence the reason I bought it. Okay, next up, we've got Corsair Gaming, ticker symbol CRSR. Now, this is a smaller company, and many times smaller companies, this has a market cap of about $2 billion. Sometimes that's when you have a company that small, they don't have positive free cash flow. But we can see that analyst estimates have their free cash flow being positive, and using those estimates, well, it looks like these stock could be undervalued. Plus, when we look at their own price to earnings multiple compared to their own history, looks pretty good, and their enterprise value to revenue also looks pretty good. So they look like they could be undervalued from a few different angles. And then when we switch over to some growth numbers for them, well, once again, this looks fairly good. Sure, it's a somewhat newer company, but still, the revenue looks like it's heading higher, along with profit and free cash flow. So just using these numbers alone, well, it looks like this growth stock could be worth a deeper dive. I think that this company's small enough that if we could get in early and this thing grows, I think the upside potential could be quite big. Now, I plan on doing more extensive videos on each of these companies, but at first glance, it looks like the companies that we have on this list and on the lists, we did a value video last time and a dividend video before that. We're going to do a deep dive on each of these stocks, but at first glance, these are looking fairly good. Okay, next up, we've got CHWY, ticker symbol CHWY. Now, we can see that CHWY is still in the startup phase of their overall life cycle, but although they have lower free cash flow numbers, those numbers are growing fairly quickly. And then when we look at their PE ratio, well, clearly, they just became profitable. That's the only reason why this PE ratio would be as high as it is. That would mean that their PE is something super small. But still, with that being said, using discounted free cash flow, well, it looks like the stock, according to that and according to their own weighted average cost of capital, looks like the stock could be undervalued. And then we check out some of their growth charts. Well, here we can see that revenue is growing nicely, and then both net income and free cash flow are also heading in the right direction. So overall, it seems that this growth stock could be another one to do it could be an interesting one to do a deep dive on. Okay, next up, we've got CORVO, ticker symbol QRVO. So CORVO looks like it could be undervalued when we use not only my discounted free cash flow required rate of return, but a few other methods as well. So this is likely a good sign for getting that could be potentially buying this stock at a good price. And then when we switch over to some growth charts, well, the two that interest me the most are their free cash flow numbers and their net income numbers. Both seem to be picking up pace, and this could be a good sign for somebody who might be interested in adding some growth to their overall portfolio. I like it when free cash flow is growing, and if they're able to outperform, well, that value that we look like we could be getting with these numbers could be even better. Okay, now let's jump over to a healthcare company. So this is CIGN, ticker symbol CI. So CIGN is trading at a decent price, both using my required rate of return of 7.5% and the company's own cost of capital. So that's good. And then when we jump over to some charts here, well, first off, we could see the big jump in CIGN's revenue, and that's after they acquired Evernorth Evernorth is where Express Scripts is. Express Scripts, ESRX was the ticker. Well, that company was ultimately acquired at the end of 2018 by Cigna, which explains why in 2019 we had a big jump in revenue. But what looks more interesting to me is the growth that we see in their net income. So it appears that net income has some decent upside. When we looked at both revenue projections according to analysts and net income projections, well, both of those look more interesting over the near term, over the next couple of years, than something like free cash flow does. But even using the free cash flow, the somewhat limited growth free cash flow numbers, well, the stock looks like it could still be undervalued. So if we're looking for some exposure to healthcare, again, this could be a good one. Now, if you're interested in getting access to this website, I will leave a link in the description below as to how to get access to the website once it's done being built. We're looking for it to be done being built in the first half of this year. So by the end of the second quarter of 2022. Thank you so much for sticking with me all the way to the end of the video. I got a link right here to sign up for the website. I got a link in the description below. Thank you so much, and I'll see you in the next video.